Hello and welcome to a new episode of Majlis and Markets with your host Hassan Javraj. In this podcast, we bring you thought-provoking conversations of influential leaders in Islamic and global markets. As usual, before we begin today, wherever you're listening to us, please remember to like, share and subscribe. It really does help us out. You can also send your feedback, comments, questions and suggestions to our email address hassan@majlisandmarkets.com. In today's episode, we're talking about Qatar. Following the successful 2022 FIFA World Cup, Qatar is now focusing on diversifying its economy beyond hydrocarbons. Joining us to discuss Qatar's post-World Cup strategy is Akbar Khan, acting CEO of Al Rayyan Investment. In our conversation, we explored Qatar's economic landscape before the World Cup, the challenges it faces in the coming years, and the growth of the region's equity capital markets. Akbar Khan, welcome to Majlis and Markets. Good to have you here.
Thanks, Hassan. Great to be here.
Akbar, you've got quite an interesting background. I think that you're probably one of the few people that can talk about Qatar and talk about what's going on in Qatar, pre-World Cup and post-World Cup. But before we get into all of that, I really want to get a take of your early life and how you got into, banking and how you ended up in Qatar.
Sure, absolutely. Be happy to go through that. So I'm from Pakistan. I wasn't born in Pakistan. By the time I was 18, I'd spent half my life in Karachi and half my life in Dubai. So I lived in Dubai through the 80s, and so that was an entirely different place to what it is today, obviously. And then after I finished my schooling, which was in Karachi, I moved to the UK to study. I was at UCL, and I did a degree in history and economics. And interestingly enough, I find the skills I learned during my history degree, I still use today, whereas I think the economics that I learned probably wasn't useful very soon after I finished learning it. And then after university, I moved to Deutsche Bank and started my professional career.
And what year was this approximately that you graduated and went to Deutsche?
Yeah, so I graduated in 1997, and I started on the Deutsche Bank graduate training program, which in those days was well, actually I don't know how big it is anymore, but there was, I think, 300 or 350 people who we were in a 3-month-long classroom-based training program. They booked out a hotel in Surrey Keys, and we were all there for 3 months. So that was certainly an experience.
Fantastic. And then was that looking at equities across the world, or was that in a specific region?
Yeah, so I started off in the European equities business. I started off as a trader on basically market making for UK stocks. This was pre the dot-com bubble, but so interestingly enough, we were looking at media, telecom, and technology. Obviously, a few years later, that became the cool sector of TMT, but it wasn't cool at the time. And I did that. I actually wasn't doing that during the dot-com bubble. I did that, and then I moved from there to sort of looking at European equities, not from a trading perspective, but working in a new team that had been set up effectively to try and monetize the extremely large equity research platform that the bank had built up. They had more than 100 research analysts across, I think, 7 or 8 cities in Europe who were covering close to 800 or more stocks. So it was a massive platform. And so we were a team to basically try and work with the research. We were sitting on the trading floor, but was working with the research analysts to try and figure out how to monetize all of this massive amounts of research that was coming out, and to kind of make sense of it for people on the trading floor, for traders, for salespeople, etc. So it was a fascinating role, because it was very much of a hybrid role that we were making up as we were going along. And then we realized that some of the other investment banks started setting up similar teams. So clearly we were doing something that was useful. I did that for I think think probably about 7 years or so, and then moved to emerging market equities, basically to set up the same team that in Deutsche Bank, which was the conduit between research and sales and trading, focusing on the Latin America and CEMEA business. So CEMEA being CEEMEA, Central and Eastern Europe, Middle East, and Africa.
Great. And then you transition more towards the Middle East, right, after that period?
Yeah, so I mean, look, I was dealing with CEMEA and LATAM in 07, 8, 9. That's when emerging markets were red hot. They were booming. And I remember sitting in London thinking, I'm sitting in London and dealing with geographies from Chile through to Oman in the east, that entire southern, in the south. Russia had been booming at the time. The GCC was doing extremely with Dubai was having a real estate boom. Central Eastern Europe was booming. Everything was happening, Brazil, Mexico, etc. And I remember sitting and thinking, in dreary London, what am I doing looking at emerging markets from very much of a mature and developed market, which doesn't have quite the same excitement. And so I thought I should be doing emerging markets from emerging markets. And I think, bought into the advertising of the futures in emerging markets, and thought this is what I want to do. So I wanted to move to the Gulf for a number of reasons. I wanted to be closer to home. In Pakistan, I love London, but I describe my time as I spent 14 winters there. I don't like January, February when you don't see the sun for weeks on end. I don't like cold, gray, rainy weather. So yeah, I thought one place to reliably get sun every day is the Gulf, and also more importantly, I found an opportunity in Qatar to move to the buy side, which I wanted to do. So that's how I ended up in Qatar in March 2009.
Fantastic. And that was with Al Rayyan Investment where you are today?
Yeah, that's with Al Rayyan Investment. So my professional my CV is quite simple. I've had 2 jobs, the current one and the previous one, Deutsche Bank and Al Rayyan Investments.
Fantastic. And why Qatar in particular?
So as I mentioned, I wanted to be in the Gulf. At the time, I was choosing between Abu Dhabi, Doha, and Dubai in terms of where I wanted to be. And I actually thought Abu Dhabi, I think probably, if I remember correctly, Abu Dhabi was my preferred option at the time, but I didn't really get very far in trying to get an opportunity there. I'd lived in Dubai, so I knew Dubai very well. So I thought, let me try something a bit different. I lived in Dubai as a child, obviously not professionally. And I knew that Doha was going to be a very different country over the coming decade because of this enormous gas expansion that they were doing at the time. And I thought this is a relatively undiscovered emerging market. And if I want to have, be living somewhere where there's going to be a lot of growth from an economic point of view, then that probably will help professionally as well.
So you moved to Qatar in 2009, Akbar, and I would say Qatar really got on the map globally or internationally in 2010 when they were awarded the World Cup for 2022, which took place a few years ago. What was it like, in that period, just in the run up to 2010?
Yeah, so look, when I moved to Doha in 2009, it was I'd arrived. The population of the country was 1.5 million. And it had doubled in the previous 4 or 5 years. So when I arrived, there was a shortage of pretty much everything, from apartments to restaurants to malls. I remember driving around trying to find parking in mall car parks. There weren't that many malls at the time. I didn't have children, but my friends that did were struggling to find schools for them, trying to get a doctor's appointment. There was a shortage of everything. When you've had a country where the population doubles in 4 or 5 years, you can imagine that there's absolutely no way that you can keep up with that in terms of providing services and even just restaurant spaces. So that was Doha when we arrived, a very busy, in how I describe it, very busy little village I come from Karachi, which is a city of 25 million people. So, and then had lived in London, which is 10 million. So this seemed like a small town, very modern small town, very nice place to be, but relatively quiet. Um, and then obviously, yes, the in December 2010 was when the bid was won to host the World Cup, the FIFA World Cup in 2022. And I remember specifically sitting with some friends right after we were watching that event happening on a big screen, actually, in a public place. And I remember I was with 3 or 4 friends, and I said, this is great, this is wonderful, but who's going to be here in 2022? I don't think any of us are going to be here. So I'm not sure what we're all so excited about. And funnily enough, the 4 of us that were standing there still live in Doha today. So I guess we were here for that long.
Yeah, and it was, I think, from say 2010 to 2022, the amount that was spent, it was kind of like upgrading the infrastructure in Qatar, right? And really like building the country in terms of like transport infrastructure, hotel infrastructure, and a bunch of other things too.
Yeah, I mean, as I just described, I mean, there was a huge, huge need, a burning need to spend a lot of money to help the country catch up with where it was in 2010. Forget about anything about the future. That so the first part of the capex that was required by the government was just to cater to existing demand, and then there was the requirement to cater to this extraordinary party where the world was going to be coming to see Qatar. So they had to spend money to deal with that. But also, really, what it did is it effectively meant that it accelerated probably what was a 20-year plan. So Qatar has a Vision 2030 as well, and it's effectively for most things that are physical, most things that are built. Not all of that plan is to do with building stuff. Some of it is, intangible. But for physical infrastructure, pretty much the entire 2030 plan was finished by 2022. So on our estimates, they spent between 2010 and 2022, they spent about 350 billion US dollars, which is more than double the GDP of the country at the time. So it was an extraordinary amount of spending, and it wasn't the cost of the World Cup. I mean, within that, the cost of actually building stadiums, 8 stadiums, was about 10, $11 billion. It was, as you rightly said, it was building the country. It was building power generation, desalination, a new port, airports, or new airport. And many people who've flown on Qatar Airways see that airport, and the big yellow teddy bear. It was building road infrastructure, both within the city, highways. It was building a new city in Lusail. I'm actually sitting in Lusail right now, which is where Lusail Stadium is, which is where the final of the World Cup was held. So that entire city was built from scratch. So it was basically upgrading every aspect of life in Qatar, as I said, to cater to accelerate that process, to complete the 20-year plans in 10 years or so. And as a result, now that we are in Doha post the World Cup, and I know we'll come back to talk about that in a little bit later, it's an extraordinarily, it's just a wonderful place to live, because they kind of future-proofed the city, and it's very unusual that a country is ahead of where it should be in terms of what it should have built and what facilities there are. Normally, most countries are trying to figure out what not to do because they have scarce resources. Here we have a situation where they've kind of done everything early.
Yeah, exactly. And if you look at it, right, Qatar is like I think the third or the second largest exporter of liquefied natural gas. It's a major also oil exporter as well. It's part of the GCC. But Akbar, you think like in 2010, 2011, there was a lot of challenges in say 2011, and every country was impacted in the region. And Qatar with Al Jazeera and some others. And then, obviously in 2017, you had the boycott by the other countries. So Qatar has managed a lot to navigate through a lot of the regional challenges that happened, right? With the diversification and the upgrade of the country, both in physical infrastructure and soft infrastructure as well, right?
Yeah, I mean the Arab Spring that happened. Interestingly, there was one country in the whole of the Arab world that didn't have street protests, and that was Qatar. Um, Between 2007 and 2011, or 2008 and 2012, I'm not sure, but basically over that 5 year period, during when the world was having a financial crisis, Qatar had the highest GDP growth in real terms in the world over that 5 year period. Average GDP growth was 15% per annum, and the world was when we were suffering from a financial crisis. And the reason that happened is because in 2010, Qatar had finished expanding its LNG capacity to 77 million tons of LNG a year, which is what got it to being at that time the number one LNG exporter in the world, and number one by a long distance. So suddenly, this massive amount of revenue started coming through, and the government began to spend to do all of what I've just described. So unlike the rest of the world, Qatar was in a very different financial shape and different sentiment and different mood. So that certainly helped in the first, I would say, first half of that decade. And then oil prices collapsed in 2015. That was the first time we saw $30 oil for a long, long, long time. And that clearly didn't help anyone in the region, including Qatar. And that carried on for a few years. And then in 2017, as you mentioned, in June 2017, 7 years ago now, was the imposition of the blockade, which was, for anyone not listening, was effectively Qatar's borders were sealed by its neighbors, and given that 90% of food and drink, 90% or 60% of food and drink came over the land border, and 90% of fresh food and drink came over the land border. Not having your borders sealed was quite a significant event. So yes, I think having a lot of wealth, and I would say a lot of very extremely rapid planning and rejigging of supply chains very significantly meant that those of us who were living in Qatar didn't actually feel anything. There was never a time when I think there was one afternoon, the day the blockade was put into place, where supermarket shelves were emptied and there was nothing there. And then the next day onwards, there was never a time when the supermarket shelves were empty. And to be able to execute that smoothly, there was a huge amount of work that happened in the back end to allow that to happen. But that was an interesting. People talk about stress testing. Countries very rarely get stress tested like that. So I think, given that was economic, political, and trade stress tests simultaneously, they seem to come out of that extremely well, relatively speaking. And then the blockade went away after several years, and it allowed them to kind of, I think, prepare themselves for the big party that happened in 2022.
Yeah, exactly. And it was quite interesting to see how Qatar, navigated this boycott or blockade, how we characterize it. And I remember when I was visiting from the UAE to Qatar, I had to fly to either Oman or to Kuwait, and then connect to flight. And when I was speaking to people there locally at the time, it was quite interesting. They were saying like how Qatar is developing other sectors to be self-sufficient. So, for example, in food manufacturing, they were relying a lot on, say, Saudi Arabia for food imports, but Qatar was also managing to develop its own domestic sectors, as well as relying or turning to other countries like, say, Turkey or Iran for food. Was that quite impressive, do you think, or do you think it was?
I mean, from a diversification point of view, I don't think that diversification. It's interesting that when COVID happened, COVID was effectively the trigger for a lot of companies globally to end up having a kind of upgrade their IT infrastructure to allow work from home. And if COVID hadn't happened, a lot of companies would never have been able to figure out how to do that so quickly. So often you need an external shock to actually progress in a certain way. So I think the blockade certainly was the huge boost which fast forwarded and accelerated the domestic food manufacturing industry, and also, as you said, supply chain was initially supply chains were rerouted because there's huge reliance not just on Saudi but across the GCC. A lot of the FMCG companies, a lot of the big companies whose products are on supermarket shelves, they have factories in Bahrain, in UAE, in Saudi, and those products weren't allowed to come to Qatar. So they had to figure out how to get the same products that we all have got used to using from the big global manufacturers, but find them coming from other markets. But also from Baladna, which became famous because it's the domestic dairy that became famous because they brought in 4,000 cows on airplanes. Normally you do this on ships, but they didn't have the luxury of time. And we now get most of our fresh produce that we have in supermarkets here, while it still also does come from all over the world. We have the option of buying Qatari fruit and vegetables, much of which is organic, much of which has come from a farm 50 kilometers away rather than somewhere on an airplane from 5,000 kilometers away. So it's a lot cheaper and a lot better quality. So that wouldn't have ever happened had it not been for the blockade.
And in tandem, like Akbar, whilst all this was going on, you had the developments for the World Cup in the run up to the World Cup, you had the boycott and all the other challenges. Qatar was also, curating or cementing its soft power abroad, right? With investments, say the UK or other investments in other countries via, let's say, the Qatar Investment Authority or other entities of the Qatari state, right?
Yeah, I mean, when you have so much excess wealth, you have to do something with it, and you want to make investments where you think you will have excess returns. And because you are coming to this from the context of, in a Western context, people are more used to seeing some of the very large pension funds invest in infrastructure assets because they have 20, 30, 40-year investment horizon to manage their assets and liabilities. Sovereign wealth funds also are similar because they are investing for the future, investing for future generations, regardless of the country that the sovereign wealth fund is in. So they have the luxury of being able to invest in long-term projects. And Qatar at that time decided that their first priority, or the first focus area, if you like, was real estate. And a lot of it initially was centered in London. There is vast amounts of very high-end real estate in central London and now around the Olympic Village, which they own. But then those investments, that were diversified to other places in Europe, other places in Asia, around the world, different asset classes, etc. So the sovereign wealth fund is really just a function of having excess wealth, and the excess wealth is a function of being the largest exporter of LNG in the world. Or it used to be, as you said, until it lost its crown recently.
Yeah. And then would you say up into the period of 2022, Qatar also focused on other sectors? Like, for example, I remember reading about how a lot of US universities, big American universities, were setting up campuses in, say, Qatar. You had the likes of Georgetown and Northwestern and all these big American universities that had campuses in Qatar specifically for people from who didn't want or who couldn't afford to go to the US directly. So obviously Qatar curated itself as an educational hub as well, right?
Yeah, so there's an entity in Qatar called Qatar Foundation, which was initially set up by the current ruler's mother when her husband was the ruler, was the emir. And Qatar Foundation is essentially the center for education, for science, for culture, and a lot of what Qatar has in these fields is kind of come from initially from Qatar Foundation. So there is a huge focus on Qatar in terms of as part of the diversification efforts to build what is described here as build a knowledge economy. So an economy which is focused not just on hydrocarbons but on knowledge, service industries. And to have a knowledge economy, you need to obviously have a lot of emphasis on health, on education, on culture, on science, etc. And so having half a dozen or so international universities set up campuses here, interestingly enough, they have each been chosen to have one faculty. So Cornell is here. Cornell has a School of Medicine. Northwestern is here, and they have a School of Journalism. Georgetown is here. They have a School of Foreign Service. So it's not the full fact, not a full university. And all of these international universities have pretty beautiful campuses, all in one very large area. So put them all together, it's like a multi-faculty university, but with each faculty run by a different international name. Unfortunately, they're not the low-cost option of getting a US education. They're as expensive, if not more. Luckily, the Qatari government is very generous about giving scholarships to students, but the rack rate, if you like, is certainly not, doesn't mean it's a discounted education. But apart from that, I mean, HEC Paris is a campus here. UCL was here for quite a while. They then took a decision to close down all of their non-UK campuses. So this one went as well. So there is something called the Qatar Science and Technology Park, which is again focusing on, as I mentioned, science, technology, and other things. So this is all part of the diversification strategy.
Yeah, how would you characterize Qatar's place compared to, say, other countries in the GCC? Would you say it's different in terms of their diversification efforts?
All the GCC countries are very, very different. They may look similar to somebody outside the region, or they're small. Some cases, Saudi's very big, but some of them are small, and looks like the Gulf is just one big area, but it's actually the culture of each country is different. The people of each country are different. The approach to life is different in each country as well. Qatar has its own way, like each of the other countries do, and I think from a diversification point of view, they've had significant successes in some areas, not a lot of success in other areas. I think that's always the way. There's world-class transport infrastructure here. So Qatar Airways, interestingly enough, apart from it keeps winning awards for being best airline in the world, etc., but it's actually the largest air cargo company in the world. It's ahead of DHL, it's ahead of FedEx. So in terms of air transport infrastructure, Qatar Airways is number one in the world, which is pretty extraordinary. So that is obviously part of the diversification effort, because Qatar Airways is not dependent necessarily on oil and gas revenues. There are other areas which have done very well as well. I mean, as an example, tourism clearly was a big focus for the World Cup, and that was off to an extremely slow start for a long time, and wasn't, I would say, a success story. But the numbers after the World Cup actually have been dramatically different. It's been very successful. So some areas have done very well. Some areas have been a work in progress. But I think Qatar, relative to the other GCC countries, you kind of have to, leverage your core competency, leverage your competitive advantages, and I think when you are endowed with the amount of kind of resources that Qatar has, your biggest competitive advantage is your extremely cheap energy. And that's what they have tried to use to capitalize on, both domestically and to use the reserves that have come about, or the financial reserves that have come about because of that cheap resource, on a global scale as well.
Do you think that the World Cup 2022 was successful from the Qatari perspective, from economic diversification and these kind of things?
Massively. And I say that as somebody who lived here, and it's like when you're in a restaurant and you're sitting as a customer, you have a very lovely meal. The kitchen may be in all sorts of strife. There may be arguments. People may be fighting with the chef. They run out of ingredients. They burnt something, but the customers aren't aware of any of it. They have a very lovely meal. I think sitting here in Doha, we got the insider's view of what was happening in the run-up to the World Cup, and some of it was looking like it was going smoothly, and a lot of things looked like it was just maybe they'd bitten off more than what they could chew, and it was too perhaps a step too far. But living through the month of the World Cup, middle of November to middle of December 2022, it was an absolutely extraordinary event. It was better than anyone who lived in Doha, all of us, anyone who was skeptical, better than anyone's wildest imagination. And it wasn't just us who thought that, it was everyone who visited from wherever they came in the world whether that was in the GCC or Europe or the US or anywhere else, just were wowed and amazed by how well the event went. So as a demonstration of what Qatar can do when it sets its mind to something, yes, they had a lot of money, but money alone doesn't allow you to deliver a production of that scale over a month. It's not a day; it's a month of that complexity across an entire country. That, I think, to me, the biggest legacy of the World Cup isn't the fact that it went off extremely well and that a lot of the extremely negative Western media reports about Qatar found that they didn't really have very much to write about after a while. But it's the legacy of the leadership and the government having the confidence of thinking, wow, if we can achieve that, we can achieve anything. And you can only really get that confidence after you've achieved something. If you climb Mount Everest, that sense of achievement is really only possible if you've climbed Mount Everest, not if you're thinking about climbing Mount Everest. And so I think that would have given them a huge boost of confidence to think of what's possible in the future. And as for whether it was worth it or whether it was a good idea, successful, you mentioned about Qatar being on the map. I remember about maybe 10 years ago, I was in London, in central London, at a very large department store. No, not Harrods. And I was filling in a tax rebate form, and the person said, "Where do you live?" And I said, "Qatar." And she said, "What?" And I said, "Qatar." And she had no idea. And then I said, "Have you heard of Dubai?" And she said, "Yes." I said, "Well, it's near Dubai." So she said, "Okay." And when I got the form back, my home address was whatever it was, and it said Qatar, Dubai. So she thought Qatar was in Dubai. That probably won't happen if I was to go through the same discussion today. So, was the World Cup worth it because now the person at the tax rebate desk knows where Qatar is? Probably, but I'm sure so do several billion other people who wouldn't have known of the country.
And the final game was fantastic of the World Cup, which I think also helps Qatar as well. But Akbar, post World Cup, it's been a few years since the World Cup, or it will be a few years in December that the World Cup took place. What are your thoughts on the post World Cup economic diversification? Do you see are you optimistic on the growth of the economy for the rest of this year?
So it's an interesting question. So typically, whenever you have large scale events, there is, whether you have Olympics or you have a World Cup, because of the surge in capex and government spending in the run up to the event, there is a bit of a slowdown after the event. And so that's expected. But I think one of the key difference here is the amount and extent of spending that was done ahead of the World Cup cannot be repeated. And the reason it cannot and should not be repeated, because the country was built. And now that the country has been built, not just ready for 2022, but probably ready for 2030, there isn't a need to do that government spending. Not because the government doesn't have the resources. Normally the issue is we borrowed lots of money, we had to do a lot of spending to deliver this big world-class event, and now we don't have any money. Qatar actually now has more excess reserves than it did before the World Cup. So it's not for lack of resources. It's just because there isn't a lot to spend money on. And so there has been a significant and marked slowdown in the non-oil economy since the World Cup ended. And that will take time till it gets sorted out. One of the big successes has been tourism, and I mentioned this earlier. So, during 2022, the year of the World Cup, for the whole year, 2.5 million, or approximately 2.5 million tourists have visited Qatar. And in 2023, the year after the World Cup, 4 million tourists visited Qatar. And in 2024, year to date, we are up on a year-on-year basis, up 30% on the 2023 levels. So very significant difference in, the tourism is now at record levels. And so that has been a big boost for the entire hospitality industry in Qatar. but there are other parts of the industry, or the other parts of the economy, sorry, which are not doing as well. For example, the construction industry, the contracting industry, the people that had been basically, running flat out for the previous decade are actually, to be honest, turning their attention to Saudi because there's so much work to be done over there, our neighbor to the south. So there is so right now we are in a slower period. However, interestingly enough, Qatar is embarking on another very significant expansion of its LNG production. So there are 3 phases in 2025, 2027, 2030, which in total by 2030 will increase LNG output by 85% relative to today. So if you think of it from the perspective of there's going to be a, let's say, 40 to 50% increase in government income or government revenues by the end of the decade. And there's no real money to be spent in the interim period because the country is pretty much developed, and this LNG build out, relatively speaking, is only, it doesn't even cost $100 billion over the next 8 years. The excesses and the reserves that Qatar has will double and triple. The sovereign wealth fund will probably double in size over the coming years. So that will obviously have another trickle down effect to the economy as more of that starts coming through, because you cannot have that much wealth and deployed all only outside the country. Some of it will be deployed internally, and I'm sure over the coming years there'll be more reasons to do so, whereas right now there are less so because so much work has already been done.
And Qatar is looking at other sectors as well, right? Like I read recently that the central bank recently set up a fintech sandbox. Do you think that the financial services sector of Qatar will see more development in the coming years?
I think it'll have to, and it is already, but it has to. But it has, to be honest, it's lagged its regional peers to how much the financial sector has developed. And that's largely because Qatar as a country didn't really become wealthy as people know it today till probably 2002, 2003. The first LNG shipment was in the mid 90s. And before that, Qatar was far from being a wealthy country. So it's only really had excess wealth for about 20 odd years, which unlike the rest, Saudi, Kuwait, Abu Dhabi, oil was discovered in the 40s. And have had a lot longer to develop. So I think, unsurprisingly, the financial services industry and most industries here have had less time to develop. And so I think whether it's so that is one area. Technology is a huge part of Vision 2030 and a huge part of what the government, or the direction of the government, wants to move forward in. So obviously, fintech is a key part of the enabler of allowing technology to do what it needs to. And there was a recent event called the Qatar Economic Forum, which is a government event hosted by the government, where you look up 2-3 day event where lots of leaders of world business and industry come and gather. And I heard a phrase which I hadn't heard before called data diplomacy, which is in the world. In the world of AI. The core advantage is your AI is only as good as the data. The more data you have, the better the AI and machine learning will be. So data diplomacy is where people will be using their strength will be excuse me, that they have a lot of data, and that's what they're going to use to pull their weight. And I think one of the things that Qatar is looking to focus on is trying to be one of the data giants, which is an unlikely source for such a small country, but there are ways that you can do that to get data, to have access and control of data, obviously with agreements and working with other countries, working with other people, particularly in the Arabic language. And that's where they will be investing, and not just at data centers in Qatar and other areas, but in other areas of technology as well. So there are a number of things that become available and possible, and you can start dreaming quite big, which are easier to do when you do have very significant excess savings.
What do you think are the main risks facing Qatar, economy in the next few years? I think you touched on some of them, but do you see any more like immediate risks or say medium-term risks to the economy?
So clearly, when you are such a hydrocarbon-focused economy, if there are significant changes to the price of your primary resource or your primary product that you sell, that's a risk. Qatar, just to clarify, it doesn't really produce a lot of oil. It only produces about 400,000 or 500,000 barrels a day of oil. It produces a huge amount of gas, which is frozen to minus 160 centigrade and then exported in the form of LNG, and it sells petrochemicals, fertilizers, aluminium, apart from tourism and financial services and other bits and pieces. But a large part of what it does is the LNG and petrochemical and downstream industries from LNG. So if there is significant drops in prices to this, that would be an issue. Partly that's hedged by the fact that Qatar has signs 10, 15, 20, 25-year contracts with its customers. So at least they know that they have those customers. But pricing in many of those cases is flexible. So that would be a risk. If the world suddenly decides that it doesn't want LNG, which doesn't seem to be on the horizon anytime soon, given all of the world people are trying to switch away from more carbon, lower carbon intensive hydrocarbons towards LNG. This shift doesn't seem to be happening anytime soon. Interestingly enough, despite all of the environmental issues that we are aware of, 2023 was the highest production of coal ever, and that was a function of the disruption that happened to energy supply in Europe because of Ukraine. So I think energy security has trumped carbon emissions as a priority for a lot of global decision or a lot of governments around the world. Unfortunately, this is obviously at the expense of the environment, but people want to make sure that the lights can come on. What the source of that is less of an issue. So I think while I would like the energy transition to happen sooner, I don't think personally it's likely to. It'll be measured in decades rather than in years till there are significant changes. So that effectively reduces one of the biggest risks that Qatar would have. I mean, another risk is clearly an operational one. If the LNG facilities have an operational problem, there's an accident, there's sabotage, that would obviously be a risk. But then that would be covered by the fact that there is very large amount of savings, which would be able to cover for everything else while those facilities were fixed. The blockade was something that wouldn't really have been something that somebody could have predicted. If another blockade was to happen, that wouldn't be a great outcome. But I guess if you've dealt with one, then you probably have some idea how to deal with another. But I mean, it really would have to be shocks of that sort of magnitude that would derail a country which has such extraordinary current account surplus and budget surplus and trade surplus.
As we bring the podcast to a close shortly, Akbar, there's one area I wanted to talk to you about, which I'm sure you look at day to day, is the equity market. It's fair to say that the GCC capital markets have seen a lot of development over the past decade, mostly in the debt capital market space since 2014, 2015 with the lower oil prices. But I would say it's probably since, say, 2019, 2020, a lot, or even maybe 21, there's been a lot of activity in the ECM market, the equity capital markets. What are your thoughts on the development of the equity capital markets in the Gulf and specifically in Qatar?
So I think, you mentioned that. I mean, the debt markets are actually much debt issuance in the region is actually far greater every year than on the equity side. But the equity markets have been interesting because in 22 and 23, when outside of the Gulf, equity capital raising IPOs basically had almost vanished globally. That was when the GCC was hitting record levels. So in 2022, there was 51 IPOs in the GCC, and they raised more than $20 billion. And that was triple what the number was in 2021. And yet globally in 2022, IPOs, the amount raised from IPOs was down 60%. So that was obviously very significant. In 2023, again, it was a busy year, not as busy as 22, and in 24 has been slower. And then we just had Aramco raise $10 billion in a secondary offering, which is obviously again attracting foreign capital. So yes, the equity markets in the region have been very, very strong. Largely, that's been focused on the Saudi and to some extent the UAE as well. Those are the two countries that have really driven all these very, very large numbers. And so Saudi is the momentum in Saudi is really a function of the changes that are there, the liberalization, the reforms, the hunger to really accelerate the diversification story, which we've been talking about diversification, and a lot of the policies that Mohammed bin Salman has in terms of trying to get Saudi to get closer to its potential and catch up a lot of lost years of lack of investment. So there is a very strong equity story for the Gulf as a whole. We have a fund called the Al Rayan GCC Fund. It's the largest Sharia compliant GCC fund in the region. The last 5 years, the annualized return net of fees is 14%. This is just a function of how strong the regional economy is. And on the fixed income side, in 2022, $40 billion was raised in the debt markets. In 2023, almost $60 billion was raised. And so the debt markets have also come of age. And I work for a company where everything we do is where we are owned by an Islamic bank. So everything we do is Sharia compliant. So on the debt side, we're focused on Sukuk. 2023 and 2024 in particular have been record years for Sukuk issuance. And the GCC debt markets overall, bonds and Sukuk is probably going to approach $1 trillion by the end of this year. So the capital markets in the region are also maturing as the region continues to be one of the two or three bright spots in the global economy.
And what are your thoughts on, say, the diversification and the evolution of the investor base within the region? Do you think it's still very like family office, institutional, or do you see like retail emerging as a big investor base?
So it's interesting. We never talk about retail. We talk about individual investors and institutional investors because in some cases the individual investors have more money than the institutions, and to call them retail would be disingenuous. Look, there are a lot of very wealthy individuals in the region who are nationals and citizens, and then there are obviously people who live in the region who aren't citizens of the countries that they live in. There is the investor base is emerging. There is more the institutionalized asset management industry, the institutionalized insurance industry is growing across the region, which is obviously a key domestic investor. But there's also an extraordinary amount of interest from foreign investors. The Gulf was always seen as a source of capital. It still is, but increasingly in the last few years, it's also been a source of return. And foreign investors who have found that the world is maybe not such a wonderful place for returns, with the exception of one or two or three countries, have been coming to the region where there is a lot of excess capital, where those excess reserves have been used to dampen domestic inflation and to drive economic growth. And that's why you've seen hundreds of billions of dollars of foreign capital coming into the region, either through investing in public markets, but also FDI in the more traditional ways of setting up businesses, doing partnerships, investing in these countries. So I think the investor base is changing because the mix is shifting. A, there's more foreign investors, but B, the local investors are also becoming more. There's a lot of institutional, but there's more institutional, and there's also, as they develop and mature, professionalism of the local investor base has increased significantly as well.
And more broadly, Akbar, what are your thoughts on the global equity story at the moment? Obviously, a lot of people are anticipating a interest rate cut in America whenever that will take place, and we've got elections coming up in the UK and the US. How do you see the global equity market for the rest of 2024?
So interestingly, we've not really been as enthusiastic about all these rate cuts for quite a while. 6 months ago, we thought there was going to be maybe one, maximum two rate cuts, and the market thought that there was going to be five or six. I think from February onwards, we thought there was going to be no chance of a rate cut, and we started talking about the potential for the next move in US rates being up rather than down. Everyone thought we were mad. We still feel that rates in the US are likely to end this year unchanged. But if they're not unchanged, they're likely to be higher rather than lower. So eventually, though, probably in 25 or 26, there will be rate cuts. But that's on the one hand. The reason for the stubbornness of interest rates is something to be celebrated, because the reason for that is because the US economy is so strong. 90% of consumer debt in the US is fixed rate. So they're not suffering from this significant jump in interest rates that we've had over the last couple of years, because most of them have their mortgages in the US are fixed rate. So if you've set your mortgage 3 years ago for 25 years, you were using prevailing interest rates. That's what your interest costs are every month. Your mortgage costs are every month, and you're now benefiting from higher return from the wealth creation from asset prices, i.e. the market's going up, and also because you now make more money from the cash in your bank account. So the US consumer is in a good place, i.e. it's insulated from the interest rate increases, and wage inflation is high because unemployment is low. So these are reasons why we've thought that the Fed would struggle to cut rates. And given that they're not really getting through to the consumer with higher rates, because they're mostly protected, if this continues, they may have to raise rates further. So the point is that the robustness of consumer spending and of the economy in the US is what the quote unquote problem is. I say problem because it's not a problem. It's just ironic that the market thinks of it that way. And so that would suggest that is a good underpinning for the global economy. If the US economy is in good shape, it's just as well, because the European economy is still struggling and suffering from the significant reduction in competitiveness after the energy costs exploded, after they effectively switched from getting Russian gas to US gas. And China is still trying to figure out how to get the economy to move forward. So India is booming, the GCC is booming. There are other areas of the world, isolated, smaller economies which are doing well. But by and large, you have an environment where the US is in a good place. China, for a longer term investor, will probably come back at some point. And so it's not about buy all global equities. It's figure out where you think you want to invest in, and look at valuations. I mean, one of the things that India is struggling with right now is the outlook is very strong, but valuations are very high. You've seen the fun and games with Nvidia in the US. I shouldn't say fun and games. It's extraordinary that this company now has a market cap by itself larger than the entire market cap of the London Stock Exchange, or the entire market cap of the German Stock Exchange, or the DAX. So there is a lot happening there, and there is money to be made, as always, if in the equity markets you don't take a blanket approach. You have to be selective and know what you're doing.
And you're not worried about, say, a trade escalation, say if Donald Trump returns to the presidency between, say, China and the US, you don't think this will have a longer term risk on the global economy?
I mean, trade is, I think trade flows and trade disruptions, we saw those happening, or we had Donald Trump earlier. I think there is often headline versus actual. Europe doesn't officially import Russian oil, but actually it imports lots of Russian oil. It just doesn't do it directly. and some of it just goes to India, gets refined, and then gets sent to Europe as refined product. I think ultimately trade moves, putting hurdles on trade is attractive for more and more governments, for populist policies. They're good headlines. Markets react to these headlines. They react negatively, absolutely. But over the long term, does it have a significant impact on certain companies in certain sectors? It probably will, if the sort of roadblocks are designed well enough. But I can't imagine that that it would have you would have a long-term effect over a broad part of the economy without some very, very sort of strong shock therapy, which, if it came, would obviously have a significant impact on the markets. But I can't, but I don't know how politically expedient that would be.
Fair enough. Akbar, tell us more about if you're working on anything or if you have any upcoming projects, or what are you doing these days other than Al Rayyan investment?
Trying to be a less bad paddle player. Yeah, it's so that's one aspect. No, I mean look, I have three young children. They are as hobbies go, they're a hobby that keeps you pretty busy. They're not a hobby, but they take up a lot of spare time, and it's wonderful to have that privilege to try and find the time and spend the time to watch them grow and develop. And I guess just try and focus on if my wife is going to be listening to this at some point, try and focus on trying to be having a healthier lifestyle and going to the gym more often, as I keep getting told.
And Akbar, are you active on social media, or what's the best way for people to do you write your thoughts, or what's the best way for people to reach you?
Probably on LinkedIn. That's the main social media that I use. So LinkedIn, you can by all means message me directly, and I'm not the world's fastest responder, but I will get round to doing it.
Fantastic.
And I'd be very grateful to have conversations with people. So I would look forward to that.
Fantastic, Akbar Khan. I wish you all the best in your paddle journey, and thanks again for coming on the podcast.
Thanks, Hassan. It's been a real pleasure. Thank you.